Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about the indicators that tell us that there are major problems now starting to surface for Russia. Ever since Russia invaded Ukraine, there's been a lot of conjecture about how efficient the sanctions being applied against Russia have been. Almost immediately following the invasion, financial sanctions and sanctions against the trade in Russian oil and gas were applied against Russia, and Russia successfully managed to pivot and start selling larger volumes to India and China. However, over the last 6 months or so, there has been a significant tightening of those sanctions. The USA has started policing them much more heavily, and we're now starting to see the impact of that hitting the Russian economy. And the three significant ways that the impact is now starting to manifest itself is in inflation, interest rates, and what's happening with the Russian Ruble. So in today's video, we'll go through exactly what's going on with regards to Russian inflation. It's been on the rise for the last few months, and despite the fact that Russia has increased its interest rates to 16%, which is an incredibly high level, inflation is refusing to go down. So we'll go through the details as to what's going on with inflation and interest rates. We'll also have a look at what's happening with the Russian ruble, because once again, the value is on the slide. It's going down against the US dollar, and we'll talk about why that's happening. We'll also have a look at some promises that President Putin made to the Russian population back in 2018, when he promised to increase life expectancy and the standard of living in Russia. So we'll see how that's gone on, and we'll compare the life expectancy in Russia with some of the other major economies in the West. And then finally today, I'll wrap up with my summary as to what I think is happening right now in the Russian economy, what the ongoing impact of the further policing of the sanctions will be for Russia, and what's likely to happen over the course of the next 3 to 6 months. But before we get started on all of that, I'd like to say thank you so much to everybody that's supporting the channel. If you've bought me a coffee or sent me a YouTube super thanks, thank you for the time and effort that you've taken to do that. Really, really appreciate it. And if you've signed up as a long-term supporter of the channel, either through Patreon or YouTube membership or Buy Me a Coffee membership, thank you for that support. It really does help to motivate me, keeps me going, and makes me think every single day I need to come up with another video for the guys because they're supporting me, and I need to show my appreciation by posting more videos. But if you don't want to support the channel through either of those methods, why don't you think about buying a ticket in the raffle that I'm having right now for this guy here? And just to prove that this isn't a green screen, obviously this is real life, I've decided to offer up this guy, which is STILTMAN, which is one of the original statues that I've been showing on the channel for the last 3 years. So if you're interested in winning this, check out the video at the end of today's video or have a look in the link below. Now, as I'm sure virtually everybody in the world is aware, Russia has an abundance of natural resources, particularly oil and gas. And up until the invasion of Ukraine, it was happily exporting all of those products to Europe and the rest of the world and making a huge amount of income. However, as a result of the invasion of Ukraine, the West has turned its back on Russia and said that it no longer wants to buy any of those energy products. And as a result of those sanctions, Russia has had to turn to China and India to sell larger volumes in order to keep the income coming in. But as a result of the increase in the policing of the sanctions, Russia is now finding it more and more difficult to export its products, particularly to India, which is becoming concerned about the impact that buying from Russia is starting to have on its other business with the rest of the world. And as a result of this, the Russian economy is now experiencing severe problems, particularly with the value of all of the things that it's importing, because Russia is not self-sufficient and it still relies on a large quantity of imports to keep the economy going. And the problem that Russia is now encountering is that the price of a lot of those imports is rising, and that's driving up inflation in the country and causing chaos in the economy. This chart shows the movement in the official rate of inflation in Russia over the last 5 years. And the reason that I wanted to go back over this period is just to show how wild the swings in inflation have been since Russia's invasion of Ukraine started. In January 2022, which was the month before the invasion commenced, the official rate of inflation in Russia was 8.7%, which is still relatively high. However, that was similar to rates of inflation with other countries around the world. As a comparison, the rate of inflation in the USA in January 2022 was 7.5%. And the reason that inflation was high at that point was because the world was coming out of the COVID-19 pandemic, which hit all across the globe in 2020. And as we started to see the lockdowns being released, we saw all of the pent-up demand that people who'd been locked in their houses for months on end had. And we saw a surge in demand for virtually everything. And as a result of that, we saw prices starting to rise rapidly, particularly because there was a limited supply of some goods, as production had been restricted during the COVID period as a result of the COVID-19 restrictions. Immediately following the invasion of Ukraine, which commenced on the 24th of February 2022, inflation skyrocketed in Russia and the official rate hit 17.8% in April. And the reason why inflation jumped so high was twofold. Firstly, there was a crash in the value of the Russian Ruble. It fell to around 130 rubles to $1. And secondly, the sanctions that were being applied against Russia meant that there was a shortage of a variety of different goods, and therefore the price started to go up. And once again, if we compare what was happening in Russia to what was going on in the USA, you can see that inflation had actually started coming back down and was at 8.3% in April 2022. And what this tells us is that the high rates of inflation in Russia were specifically as a result of the sanctions rather than what was happening in the rest of the world. Now, in direct response to what was happening to inflation, the Russian central bank increased interest rates from the pre-war rate of 9.5% to 20%. And as a result of that enormous increase in interest rates, the official rate of inflation started to fall and was down to 12% by December 2022. In the first 4 months of 2023, something remarkable happened in Russia, and inflation fell from 12% at the end of 2022 to 2.3% by April 23, which meant that Russia actually had one of the lowest levels of inflation out of any country in the world at that point. And one of the reasons why this dramatic fall in inflation is so remarkable is that interest rates were kept entirely flat in Russia during that period. Between April and September 2022, the official rate of interest had been reduced on 6 separate occasions and was down to 7.5% in September, and the rate was not actually increased until July 2023. And the fact that we usually expect to see a close correlation between what's happening with interest rates and what's happening to inflation makes this huge reduction in inflation hard to explain. However, if we now zoom in and have a look at what happened in the middle of 2023, between May and November, there was a rapid and consistent increase in the monthly level of inflation, which rose from 2.5% to 7.5%. And as you can see, over the past 3 months, inflation has remained stubbornly high, coming in at 7.4% in December 23 and January 24, and rising to 7.7% in February 24, which is actually the highest rate that's been seen in Russia since February 23. And to put the current level of inflation in Russia into context, this chart shows the latest inflation rates for the G20. And as you can see, Russia has the third highest rate out of all of the countries. And the only 2 countries that have a higher rate of inflation are Argentina, where the economy has completely collapsed and inflation is currently at 276%, so entirely off the scale, completely out of control. And Turkey, where inflation is once again on the rise and it's currently at 67%. And the economy in Turkey is also struggling right now because its currency has absolutely cratered over the last 2 years, and that has driven up the cost of all of the imports, and Turkey is a net importer, and so the economy is in dire straits. And as you can see, Russia is number 3 on this list and has a higher rate of inflation than South Africa, where there are currently a lot of problems. And I've been asked recently if I can make a video on South Africa, and don't worry, that will be coming at some point soon. It's also got a higher rate than India, Brazil and Mexico. But I think one of the key areas of concern from Russia's point of view is the trend, because Russia currently has rising inflation. If you look at the trend in terms of the previous month and the current month, you can see that a lot of economies here have got control of their inflation. Inflation is either remaining flat or is going down. However, Russia's is going up despite the fact that they've increased interest rates to an extremely high level. This chart shows the movement in the official rate of interest in Russia over the last 5 years. And as I'm sure you'll be aware if you follow the channel, there is a close link between interest rates and inflation. And traditional economic theory says that if you have rising inflation, if inflation is above your target level, then the way to tackle that is to increase interest rates. Because firstly, it increases the cost of borrowing, so it discourages both companies and individuals from taking on new debt because it becomes more expensive. Secondly, it will increase the cost of any debt that has a floating rate. So unless you've got a fixed rate, your interest will increase as interest rates go up in the country. And thirdly, it increases the savings rates. So it encourages people who have cash to put it into the bank and earn some credit interest rather than going out and spending that money in the economy. So the result of all of those three different aspects should reduce demand in the economy. And as we know from simple economics, if you have a reduction in demand and supply stays the same, then generally speaking, that should cause a reduction in prices and so bring inflation back down. That's the classical theory. And that's exactly what Russia have been following if you look at what's going on here. Back in 2022, following the invasion, inflation spiked at 18%, and as a result of that, the Russian central bank decided that they needed to introduce emergency interest rates, and they increased the official interest rate to 20%, which is an incredibly high rate. However, as you can also see, the Russian central bank quickly reversed that decision, and within 6 months, interest rates were actually down to a level lower than they were before the war started. And once they came down to 7.5% in September 22, they remained at that level until July 23. However, in the 5 months between July and December 23, the Bank of Russia increased interest rates on 5 separate occasions to the current level of 16%. Now, an interest rate of 16% is prohibitively high. Nobody would want to borrow any money if interest rates were at a level of 16%. And just to put this into context, I thought it was worth having a look at when we last saw rates at those sort of levels in the USA. And we have to go back to 1981, when there was a severe recession, not just in the USA, but all across the world. And inflation in the USA at that point was sitting at around 14%, which is almost double the current level in Russia. And if we have a look at the same statistics for the UK, we have to go back to 1980 to see interest rates above 16%. And at that point, inflation in the UK was running at 18%. So the current official rate of interest of 16% in Russia does seem extreme, given the fact that inflation is currently only 7.7%. Especially when you take into account that in February 2023, so around 12 months ago, the official inflation rate in Russia was sitting at 11%, which is almost 4% higher than it is today. And at that point, the official rate of interest in Russia was only 7.5%. So when you take a step back and look at all of the figures, something doesn't quite add up in terms of what the Bank of Russia is doing now compared to what it was doing 12 months ago. And let's not forget that 12 months ago, the rate of inflation remarkably reduced from around 12% to around 2% at a time when interest rates stayed entirely flat. So the explanation for what's going on right now is either one of two things. Either the figures from 12 months ago were not reliable, inflation was running at a higher level than was officially being recorded, or the impact of the increased sanctions and the increased policing over the last 6 months is now starting to hurt the Russian economy and is driving up inflation rapidly. In normal economic circumstances, when a country increases its rates of interest, it generally has a positive impact on the value of its currency. And the logic for this is that it becomes more attractive from an investor's point of view. If you're paying high rates of interest, then theoretically, money should move to your country as people want to deposit it there and earn those higher rates. So let's have a look at what the recent rapid increase in interest rates in Russia has done for the Russian Ruble exchange rate. This chart shows the movement between the US dollar and the Russian Ruble over the last 12 months. What this shows is that this time last year, $1 US was trading for around 75 rubles. Today, it's trading for around 93. And that movement represents a fall in the value of the ruble of almost 20% over the last year. Now, as we've just seen from the interest rate chart, In July 23, the official rate of interest was 7.5%. However, today it's 16%. So over the last 8 months, the rate of interest has more than doubled. If we look at the movement in the exchange rate between the dollar and the ruble, back in July 23, $1 was trading for around 89 Russian rubles. Today it's trading for 93. So over the past 8 months, the value of the ruble has fallen by around 4.5%, despite the fact that interest rates have more than doubled. So what this tells us is two things. Firstly, the value of the ruble is not linked to what's happening to interest rates in Russia. Investors are not interested in what the official rate of interest is. Even if it went to 100%, I doubt many overseas countries would be looking to deposit large amounts of cash with Russia right now. And secondly, the value of the ruble is under pressure as a result of what's happening in the Russian economy. As I'm sure you'll be aware, President Putin was recently re-elected for another 6-month term, and this follows on from his election in 2018. And interestingly, back in 2018, he made a number of promises to the people of Russia in terms of improving their standard of living and also their life expectancy. And I thought it was worth having a look at those promises and seeing how Russia is doing compared to what he said was going to happen. In 2017, 12.9% of the Russian population was officially living below the poverty line, which was defined as having less than 14,339 rubles per month to live on, which is around $157. And at the time of the 2018 election, President Putin said that he would halve that figure. He would reduce it to at least 6.5%. However, unfortunately, by the end of his 6-year term, the number of people living in poverty had only reduced to 9.3%, so nowhere near the 6.5% that he was targeting. And interestingly, he's recently set a new target of reducing the poverty line to 7%, which is above 6.5%, the original target, by 2030. And interestingly, one of the ways that Russia did reduce the amount of people living in poverty in 2023 was by paying higher wages, which was a reflection of the labour shortages that the country is currently experiencing, together with increased benefits for families and children, higher salaries to attract contract soldiers, and compensation payments to the families of those killed and wounded in Ukraine, all of which is continuing to drive up inflation and therefore causing more problems in the Russian economy. Now, one of the other key election pledges in 2018 was to raise the life expectancy in Russia to 78 years by 2024. And this chart shows the life expectancy of Russian citizens dating back to 1950 and also extrapolates the life expectancy out to 2100. And what this shows is that in 2018, the life expectancy in Russia was sitting at 72.3 years. And whilst the expectancy rate has increased over the last 6 years and is now sitting at 73.1, it's significantly below the 78 years that President Putin promised at that time. And one of the reasons why life expectancy is an important metric is that it gives us an indication as to what the standard of living is like in that country. As generally speaking, if you have a better standard of living, if you have a good life, then you should live longer on average. And I thought it'd be interesting to compare the current life expectancy of 73 years in Russia with a few other economies. This chart shows the life expectancy chart for the USA, and as you can see, the current life expectancy is 79.3 years in the US, which is over 6 years higher than the current rate in Russia. In the United Kingdom, current life expectancy is 81.9 years, which is almost 9 years higher than it is currently in Russia. In Canada, you can currently expect to live to 83.1 years, which is 10 years higher than it is in Russia. In Australia, current life expectancy is just over 84 years, so almost 11 years more than Russia. And Japan currently has one of the highest life expectancies in the world, at 85.1 years, which is 12 years more than you get in Russia. So if you want to live longer, what these statistics are telling you is that you should move to Japan. So what's the summary and conclusion today? Well, I wanted to post this video because what's happening in the Russian economy is really difficult to work out in terms of the level of information that Russia is releasing. It's severely cut back on the level of data that it's publishing for the rest of the world to see. So we can only really look at a small number of metrics. And what's happening with inflation, interest rates, and the Russian ruble are absolutely critical to tell us exactly what's happening right now, because a lot of the information that we are being provided with is telling us that Russia is doing really well. We are constantly receiving messages about new deals that Russia has cut with India and China, and the fact that it's actually doing better than it was before the war. That's the propaganda that's coming out from the Kremlin. But in order to dig through that and try to get a good feel as to what's actually happening on the streets, I think the three metrics that we've talked about today are a really good indication. And what we've seen from today's data is that inflation over the last 6 months has risen rapidly and is staying at a really high level, which is difficult for the Bank of Russia to be able to fix, despite the fact that they've hiked interest rates to an emergency level of 16%. And that was done back in December. So those rates have had time to filter through. Normally it will take 2 or 3 months for the full impact of any rate changes to start hitting people. When we're talking about increases in debt costs, it generally takes a while for people to notice it, because you might not get your statement, your credit card statement or your bank statement, until the month after you've made the payment. You then notice that the payment went up and then start thinking, maybe I should do something about that. It might take you another few weeks before you actually start making decisions to cut back on your spending. So it does take time for these rate changes to filter through. But the Bank of Russia have been increasing interest rates since July 2023. So they increased them 5 separate occasions to the current level. So the writing has been on the wall. The message should have been getting through. But unfortunately, from Russia's point of view, it hasn't seen a reduction in inflation. And this does throw a question mark over what happened at the beginning of 2023, when interest rates were down to 7.5% and there was a month-on-month reduction in inflation. That still doesn't really stack up when you take a step back and think about why that happened, how inflation came down so rapidly at a time when interest rates were simply not moving. But what we're seeing right now is that interest rates are really high. They're at levels not seen in the USA and the UK for more than 40 years. So these are exceptionally high rates. You would expect them to have a rapid impact on what's going on with inflation. But inflation in February actually went up, and it's now at its highest point for more than 12 months. And that's a real problem from Russia's point of view, because Russia is still dependent on imports. It's got lots of raw materials, but it doesn't manufacture all of the things it needs, and it's importing food products as well. So it's dependent on its imports for a variety of parts of its economy. And those imports are becoming more expensive, partly because Russia has less choice now. Because of the sanctions that are in place, it's having to buy from countries that are still prepared to trade with Russia. So it's got a limited amount of supply, which always drives up prices. But also prices are going up because the value of the ruble is falling. Despite the fact that interest rates have been hiked to these really high levels, the value of the ruble has fallen over the past 8 months, and it's continuing to fall. So what that means is that anything that Russia is importing is becoming relatively more expensive, because the citizens of Russia are having to pay for it in Russian rubles, and so those prices are going up. So this is becoming a really vicious circle from Russia's point of view. And what the data is telling us is that we are now seeing problems occurring in the Russian economy. And these problems are going to be really difficult to fix, because the Bank of Russia can't really raise interest rates to a much higher level. You can't go beyond 16%. You could go to 20 or 30 or 50%, but then your economy becomes similar to what's happening in Argentina, where everything is out of control and nobody wants to use your home currency. Everybody wants to use things like the US dollar. Now, obviously, from President Putin's point of view, he doesn't want to see dollarization in the Russian economy. That would be the last thing that he would want to happen. So he's going to have to deal with these prices. But what we're seeing is that the economy is really starting to show signs that the sanctions are having a huge impact, and Russia is really starting to struggle. And it'll be fascinating to see what happens over the next 3 to 6 months. If we see a continuation of the rise in inflation, then the Russian central bank is going to have to do something else to try to bring it back down. It might have to cut back on its stimulus policies, to cut back on the money supply. But if it does that, it's likely to push the economy into recession at a time when the Russian state is saying that Russia's doing really well and its economy is going to grow by 3 or 4% in 2024. So we're starting to see the fundamentals unraveling right now, and it will be interesting to see what Russia tries to do to fix these problems. So hopefully you've enjoyed today's episode, you found it useful, informative and thought-provoking. If you've liked what I said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face. I've got some really exciting news for you. I've decided to give away another one of my statues, and this time it's this guy, the man on stilts. Now, if you've been watching my channel, you'll know that this is one of the original pieces that I've been showing in the background for the last few years. This is a truly amazing piece. I absolutely love it. And it's made by a British artist called Paul Moggetts, and he makes a limited number of each one of his pieces, and I've managed to secure a second one of these, but I'm giving this one away, which is the original one that I've had in the background for the last few years. And if you'd like to win it, you just need to buy a ticket in the raffle, which are priced at £1 each, which is around $1.30. So very affordable. So if you'd like to support the channel, rather than buying me a coffee or sending me a YouTube super thanks, why don't you buy a ticket in the raffle and you could have this in your home some point soon. Now, in terms of organising this, I've got an independent company to collect the cash and make the draw for me. So I won't be choosing it. It will be entirely at random. And I will post this anywhere in the world to whoever wins it. There is a possibility that you may need to pay a little bit of import duty depending on where you live and what the rules are. But I will send this anywhere. So if you'd like to win it, please buy a ticket in the raffle and good luck.